So good afternoon, everybody, and this is our first virtual roadshow event for the British Design Fund, so thanks very much for attending. And the purpose of the events is to give investors, advisors and managers the opportunity to hear from the team of us behind the fund, as well as from companies that have been invested and supported by us. And today we've got Jenny Bailey from Calla. First of all, I'm David Motum, one of the founding directors and investors in the BDF, and I'll be your chair of today's discussion. So apologies in advance if my technical ability fails at any moment in time. I'm sure we'll be able to get through it. The session won't last any longer than an hour and will include a Q&A at the end. So joining me today is Jenny Bailey, founder and CEO of Calla Shoes. Hi, Jenny.
Hi.
I think we invested, if I'm correct, we invested in Jenny in 2017 in Fund 1. We've also got Boyd Carson, who is founder and partner at Sapphire. Sapphire specialises in the management of funds, particularly VGTs, EISs and SEISs. And Boyd runs all the regulated activities of the BDF, so is a key player on our behalf. And also, finally, we have our CEO and founder, Mr. Damon Bonser. Hi, Damon, you okay?
I'm good, thanks.
Okay, so just a quick note about the Q&A. If you've got any questions to put to the panel, can you just please post them via the Q&A chat function, which I can see at the bottom of the screen, so hopefully everyone can. And we'll aim to get through as many as we can. We've already got a number actually pre-submitted, which is great, and we're going to answer those first. So I think the first thing we'll do is we'll have a few words from each of the panelists about themselves and their businesses. So I'm going to start with you, Jenny.
Okay, so I set my business up in 2016, and it's called Calla. Calla's a brand of beautiful and stylish footwear for women who suffer from a very common foot condition called bunions. Hopefully you all know what a bunion is. If you don't, then you can Google it after this. But I've been a personal sufferer of bunions my whole life. They kind of started in my teenage years. I'm now in my early 40s, and I would say that they've kind of got worse, or they have got worse as I've got older, and I couldn't find any shoes to fit my feet. I think it was about 10 years ago. It was when I was getting married, and I was looking for like a really pretty pair of wedding shoes to go with my wedding dress, and I just couldn't find any anywhere. I was like, you know, down to page 7, 8 on Google worldwide, just trying to find something, and that was kind of my light bulb moment. And then about 5 years ago, about maybe 5.5 years ago, I was in a redundancy situation as I was head of marketing at university, and then I just decided that was the opportunity to set the business up, or to kind of at least find out if there was a market for my business idea, and there was. And when I launched it in 2016, we sold like hundreds of pairs of shoes from day one, because there was that many people out there, that many women out there desperate to buy shoes. We sell online, predominantly had an e-commerce focus for the business, so that's, you know, that strategy is being developed all the time. But we've sold shoes into I think it's almost 60 countries across the world now, to women in almost 60 countries. So mostly UK, but, you know, outside of that, we've sold to like Israel, Singapore, New Zealand, like right across the world.
Okay, thanks very much. Thanks, Jenny. Damon, you're going to talk to us about the BDF, I think.
Yep, hi everyone. Damon, founder and CEO of the British Design Fund. For those of you that don't know so much about it, we set the fund up a few years ago in response to a gap in the market that we saw in the UK, which was around early stage product and manufacturing businesses. The team consists of David. David, you introduce yourself as well at the end. But so David, myself, John Mathers, former CEO of the Design Council, David Kremer, owner of Rubik's Cube, and Jonathan Silverman, our legal director. And we sort of came together and just, we were surprised by what we were seeing in the UK. There really didn't seem to be the level of support, sort of an expertise, and investment opportunities for the early stage businesses. So a few years ago, we set it up. I suppose the things that are very important to us, we believe in good design, user-centered design. So Jen's a good example of that. People that really understand the problem and the need that they're solving through their product. We passionately believe that these businesses need more than just cash. They need expertise as well, and we'll talk a bit more about that later on. And really the kind of companies we like to see are ones that they should have a physical prototype. They may not have launched. I mean, with Jenny had just launched by the time she started talking to us, but if they've got validation of demand, that's equally sort of okay for us. But they have to have a physical product. There should be some IP there, whether it's a patent or a registered design. The trademark's kind of fairly sort of given that would be protected, and we should, and the committee should feel comfortable that within 12 months that business with its pre-revenue can be trading, and I'm trying to think of other important points to cover. But for now, that probably covers it. Yeah.
Maybe just a quick word on how companies come to us, or we find companies who are looking for investment. That might be quite useful.
Yeah, so our deal flow comes from, ourselves as directors. We're, a number of us are from, the manufacturing space. My previous businesses have been manufacturing ones, and I'm very active in the early stage hardware space, as is John Mathers. And so as directors, we get a lot come directly to us, and we get a lot of coverage because what we're doing is rather unique. There's not really anyone else doing it the way we do it. But on top of that, we've got some partnerships with institutions such as the RCA, the Design Council, but also things like really sort of small boutique design agencies and CAD, computer aided design agencies, where we get those are sometimes the best companies we see. Will there'll be founders that that they want to develop a product. They may not be designers themselves. They end up going to a small design agency to try and help them realize this idea they've got in their head. And at that point, we start to talk to them, and it may mean that we've got to work with them, like coach them maybe for 6 months before they're ready to pitch. But those ones we kind of like, they've not necessarily done the circuit of trying to raise money. They've not really thought about it. They just thought, we want to solve a problem. We're passionate about this sector, but they know that they kind of need more help. And just the last point is, we would only support a company where we feel we can add some value to it. And that's quite important to say as well.
Okay, Damon, thanks very much for the time being. Boyd, just over to you, just to tell us about Sapphire. That'd be really good, thanks.
Sure. So Sapphire is an investment management company authorised by the FCA to manage funds such as the British Design Fund. And we really specialise in SES and EIS type investments. And we've been doing this for about 10 years. And we do also a lot of EIS and SEIS advanced insurance applications. So we're very much involved in the whole EIS space. It's really our niche area. We have, I think, approximately 30 funds under management, of which 25 would be SES and EIS related. So we really do live and breathe this space, and we work very closely with the British Design to obviously work through the investments and then report back to the investors. And that's really, for my own background wise, I qualified as a chartered accountant, and I managed a whole portfolio of funds out in New York before coming back to the UK to set up Sapphire with my wife. My wife's ex-Goldman Sachs, and we run it together. We have a team of now 7 of us, and yeah, that's Sapphire.
Boyd, thanks very much. So we're now going to have some topics for which we're all going to discuss on the panel, and the first one we're going to have a discussion about is why is now the right time to invest in British design and product businesses. I think possibly, Damon, it might be quite a good idea if you start us off on this one.
You're on mute, Damon.
Yeah, I can't hear you.
One of us had to do it.
Yeah, I'm just so pleased it wasn't me, to be fair.
There's none yet.
Right, so kind of, okay, so question, like, why do we believe it's a good time to invest in British design and product businesses. Look, the reason we launched the fund, as I mentioned, is we saw a gap in the market. So we felt the time was right a few years ago. The UK, in the UK, we produce some of the world's leading designers, inventors, product innovators. But sadly, despite that heritage, there is a major funding gap within the early stage sector. So it really, that in itself is for us was sufficient. But it's not just us that believe that. We are, like, the UK is the second biggest design economy in the world, and it's the largest in Europe. And recently, a report, I'll just read quite. So the Creative Industries Federation recently highlighted this as well in their most recent report, saying that creative enterprises, looking to transition out of that startup phase, they have so few funding options really available to them, and in particular around that 50,000 to 250,000 kind of ticket size. So that sort of, I guess that that was the case 2 years ago. I mean, if we're talking particularly about events most recently, do I think now is a good time? I think, to be honest, I think now there's not been a more appropriate time. The UK is still failing to get sufficient funding to those businesses, and they are a very significant part of our economy. And I suppose it's worth me just clarifying, when we talk about kind of design, everyone's got a different view of what we mean by that. I mean, here for us, what we like, we're talking about sort of purpose-driven design, so design where users are at the very heart of the business. So the focus on the users is it's an important distinction for us. And I think kind of in today's climate, one can argue that user-driven design, so design with a purpose, but the sense of it is even more important. And looking at where we are now with, hopefully coming out for the time of the sort of lockdown and coronavirus situation, it's a period of uncertainty. It's great, and the uncertainty will undoubtedly continue for the next sort of 12 to 18 months. You'd have thought at least. But all these sort of things, all these factors, they can actually drive innovation. So we look at it and see necessity really as being a driver of that innovation.
I think one thing is as well, just to reiterate that from our point of view, which I think hopefully people are aware of. It's not that we're non-tech, but we're what I call products. An awful lot of tech funds, which are the fintech funds, other tech funds that are around, and as far as I'm aware, and maybe you and maybe Boyd might just clarify, I don't think there's anything else directly in our space right now, purely in the product space.
Yeah, so how I describe it, I say
fintech space, I think.
Yeah, so for us, yeah, like you say, you're right. We don't, many of our businesses have huge amounts of tech behind them, but I suppose our differentiation is, the exception of all else, the businesses have to have a hardware element. There's got to be a manufacturing element to it where we can add some value. But yeah, tech, you can't have, it would be very unusual to find a business nowadays that doesn't really have some tech going on at some different scale. And then just sort of, I suppose my last point really being, again, why right now? I'd say sort of even before COVID, the world was facing some pretty serious challenges. We had, climate change, and impact in general was topping the agenda for what was concerning consumers and business owners alike. In the UK, we've got a particular challenge, coming at the end of this year, which will be our departure from the EU, and how we're going to compete, on the world stage and stand up on our own. And then on top of this, probably the last, and this is very sort of pertinent to design and product, is that we have a rapidly aging population. So you put all this, and obviously, and on top of that now, we look at COVID and say, well, how is that impacting the way people live their lives, and the products that they use? So all those challenges, they create unique user needs. They create specific problems which need to be addressed, that need to be solved. And I'd say, going back to our rich heritage in the UK of we are such a strong design nation, we're really well placed to solve those problems, and a lot of those solutions will be born out of the UK. So we feel, look, we're passionate about it. We feel, businesses that embrace good design, that that are considerate in their manufacturing choices. They have to be, and they're aware of the impact they have on the environment. But importantly, the businesses that set out to solve real problems, make a positive difference, will be the ones that rise to the top. So yes, we passionately believe in it. That's what we're all about. So yeah, hopefully that answers it.
And Boyd, have you seen any uptake in the last couple of months in terms of sort of COVID recovery type investment opportunities come up, or in your space particularly, or not really?
In the sense of opportunities per se, yes, absolutely. This is a great time if you are a, dare I say, an investor in venture capital. This is the time, from my perspective, people should be looking, because it's the time to invest, and it's the time that those companies need the money. So yes, after a market correction, so to speak, it's always the best time to consider it.
And do you think there has been, that there potentially could be some more interest, you know, now that supposedly, you know, more British entrepreneurs will come out of the pack on the grounds that, you know, people want to start up on their own and develop their own types of businesses as a result of what may happen through COVID, or not? Or do you think that won't happen?
I haven't seen evidence of it as of yet. I think a dedicated entrepreneur will always find a way to launch, no matter what the market conditions are.
Yeah, that's a good point.
Whether there are more startups now or such like businesses occurring compared to before, I would say on the whole it's probably slightly less, but it's still early days, and I suspect I have noticed particularly that people are putting into action the plans that they may have been putting off for many years, because they've had the downtime to sit and think to themselves, oh, I really must do that, I really must get that idea underway. And I can certainly say from my own business perspective, it's probably been the busiest we've ever been, with people coming to us saying, oh, we'd like to do that, or we would like to do this, because we've just had time to now actually sit and think about it, and we now actually want to go ahead. So yeah, I would like to be optimistic and say yes, there will be some great opportunities come up.
Yeah.
Okay. Thanks.
Yeah, we've seen quite a few over, you know, not right at the start, but the last sort of 2 months, I've seen a definite spike in applications, but also a lot of, like you said, Boyd, the applications coming from people that we've maybe seen, not even got through to pitch to the committee, but we've seen them really early, and I've said, look, it's just, you're a little too, you need to do some more thinking on it. And they've clearly gone away, and this is the time they've sat down, done the plan, done the market research, thought it through, working towards a prototype, and they're getting back in touch now. So yeah.
So Jenny, just from your point of view, when was your sort of, in inverted commas, right time to invest? You just made the decision? I mean, I'm sure it wasn't quite like that, but obviously something drew you to make the decision and think, okay, I'm going to go for it.
I think when I first started the business, I was more focused on just getting the business off the ground, you know, and getting the product right. I didn't really know what investment was. I didn't, I'd seen Dragon's Den, but I didn't really know that much about what it entails. And I was lucky enough to get onto a business accelerator program, and that's how I found out about the fund. Damon had put the feelers out, I think, into it's sponsored by the NatWest, so he put the feelers out through those business accelerators, and said he was setting up this fund and looking for potential product-based innovative product-based businesses. That was it, in early stage, and I thought, oh, that's me. And I think that I'm the type of person that will chase down any opportunity, because you never know, you know, it might be the right one. And there was nothing to lose. So that's kind of how I went into it. And then as I kind of like researched what investment would mean to my business, and kind of had more of a clear, like kind of started mapping my vision out about where I wanted my business to get to, I realized that the way I was going to get there was through taking investment. So I think most entrepreneurial journeys, they might be different to mine. I think you're supposed to kind of talk to like hundreds of different investors and get turned down by nearly all of them. But luckily for me, you were the first people that I pitched to, and you offered me investment. So right time, right place, I think.
Probably be slightly different now, Jenny. It's all right, I'm only joking. I'm only joking. And how did you decide where to look for investment? Was there how did you go about that process?
Well, that's what I mean. I think when I pitched to you guys and you offered me the investment, you hadn't quite closed the fund, and I think I used the opportunity, the time between you offering me the investment and the investment deal actually being closed, to start looking around to see, like, you know, I can't just take the first one without having, you know, seen what the landscape looked like and what other opportunities were available to me. But I think that most the kind of investors that I started talking to after that were looking for businesses that weren't quite as early stage as mine, you know, that had a bit more traction. You know, I only had 6 months sales behind me, so that work basically solidified the decision making. You know, it made me realise that the British Design Fund was the right fund for me, for my business.
Okay, thanks very much. Damon, you got any last points to come back on this first topic, or have we kind of covered it off well enough, I think? Okay, so let's move on to the second topic for our discussion this afternoon. I'm going to ask Jenny to lead this one. It's really about how can businesses adapt their sales and marketing approaches to overcome the challenges, I guess, posed by lockdown and by the types of business in general.
So I was in a lucky position because my business didn't rely on physical retail outlets to sell the products. I know that lots of businesses that were relying on kind of physical outlets have moved online. So that's what I would say first of all. You know, you need to be making sure that your online space is up to scratch, and luckily mine was. And we actually just relaunched a new site in February that was all singing, all dancing. So again, that's quite lucky as well, because you know, we went into lockdown with a great platform. And what I did have to do at the beginning of lockdown was really pull back on all spend. I'd just taken on 2 members of staff, so I had to furlough them and just kind of go back to the shop floor really, and I had to kind of start doing all of the work that I've been passing on to the staff, and looking for ways to bootstrap again. Because when
are they still on furlough, by the way, or not?
They've come back part-time now, so they're part-time working, part-time furlough. So I had to, I mean, again, you know, when you first start a business, you bootstrap anyway, because the investment that the British Design Fund put in, you know, doesn't get, you know, it's only a small amount of money at the end of the day. It was going to run out at some point. I was lucky enough to get a little bit of follow-on investment from an angel investor in December. So, but I didn't want to kind of blow through that money when there obviously wasn't, you know, to start with, there wasn't going to be the people out there to buy the products. My shoes are mainly for, you know, special occasions and for going to work. You know, I don't sell slippers, I sell nice shoes that people like, you know, to go and be seen in, people go out to be seen in. So I knew that there was going to be a downturn. So what I did was I just kind of really focused on converting my existing customers to buy more shoes. The new season collection came out just as lockdown started, so I knew I had to get through that stock. So instead of trying to spend loads of time finding new customers, I spent quite a lot of time converting existing ones, because I knew that they already trusted the brand, they'd buy that stock. And then a way that I thought about trying to engage with new customers without spending any real money was through collaborations with brands that talk to a similar audience to us. So we did a great one with a makeup, most of my customers like 40 plus, so we did a great collaboration with a makeup brand called Look Fabulous Forever, and they did a video for us, and on their YouTube channel. They got a great following on their YouTube channel with the makeup type things, and also like, you know, what to wear to the races and all that kind of stuff. And we sold like, you know, a huge amount of shoes off the back of that, and all it cost us was a pair of shoes to give away in a competition, and making that connection with that brand. So we've been doing that with, you know, I would always recommend that, because it's, in lockdown there were lots of companies in a similar situation to us that suddenly kind of had not spare time, I would say, but they were at home, they had a bit of time to take on new opportunities, and collaborations are fantastic opportunities, but when you're kind of in the day-to-day of the business, they take a bit of work setting up, so you might like put that to one side and think it's easier just to throw some money at advertising. So we used it as an opportunity to kind of get as many collaborations with brands as possible. I started doing quite a lot of I have done them before, but I did quite a few more in lockdown, like Facebook lives and Instagram lives talking about the shoes, so I'd kind of get them on screen and be like, and describe them and say where they're comfortable, and they work really well. And again, it's because people are at home, so you know, the visitor numbers that we got to those lives were much higher than we'd ever done before. I could do them during the day rather than in the evening, because I knew that people weren't doing anything during the day, they were quite happy to sit. There were loads of PR opportunities as well. A lot of publications were looking for.
It's amazing how resourceful people can be when then it's not they've not got much to do, but when there's obviously an audience out there. Plus, you know, you actually don't have to spend an awful lot of money, do you?
Exactly, you don't. So all of it is free. It was there. I got quite a few picked up quite a few good PR pieces, because there's a lot of I mean, it was all around kind of lockdown, and it was around, you know, furloughing staff, and also people looking for journalists looking for positive stories in lockdown, and how we were kind of doing marketing in a different way. So I got quite a few pieces out of that, and wrote a few blogs as well, and got a fantastic piece in the Times as well, Times Online, Times in the paper, and then I was also on the first ever Times radio show that launched, I think, like 2 weeks ago as well. I was on their breakfast show as well, and that was just off the back of someone from the Times looking for a positive story to come out of redundancy, because obviously there's going to be a lot of negative stories about redundancy in the coming months, and they wanted some positive stories. So there's all these kind of opportunities that were there, and they didn't cost me any money. I didn't need a PR person to do that. You can just pick them up yourself, because they're out there. I spent, yeah.
I was going to say, do you want to say a little bit about how you actually, because you're quite clever at picking them up, I'd say. It's quite a skill you've got.
I think it's just knowing, there's a thing called #journal request on Twitter, and you have to be on it. You have to be checking it all the time, because it's kind of a first come first serve thing. So if somebody says we're looking for a female entrepreneur who has set up a product-based business after a bad time in their lives, they're normally quite, you normally have to try and shoehorn yourself in to fit their story, which I've done a few times. But then you just kind of, then what I do is you have to be really quick off the ball. There's no point waiting a few hours, because somebody else will have got there before you. So you have to be really quick. And then I email and then put a little pitch in of like, and make sure that it meets their story. So there's no point just chucking a press release at them, which is really general about Calla. I have to kind of word it really quick. I have to word it so that it fits their story. And the Times piece came from a group that I'm in on Facebook, and it's called Lightbulb Facebook group, and it's only for entrepreneurs and for press. You can't get in if you're a PR. The woman who runs it is quite savvy. She knows if you're lying, so and she chucks you out if she thinks you're a PR person. So you have to be an entrepreneur, and it's opportunities for entrepreneurs to tell their story directly to journalists. And there's people there from the ITV, from like radio, broadsheets, magazines. Everyone is in that. All these journalists are in that group, because it's just an easy way for them to find somebody quickly if they have a story. I mean, some of the stories are a bit random. Some of them I wouldn't put myself forward for, because it wouldn't be positive for the business. But some of them are, they're real opportunities. So the PR opportunities, I've had, I guess, I wouldn't say I've had more time, but because I'm sat in here all the time and I'm not going into Manchester, and I've not got as many meetings and that kind of thing, I have had a bit more time to kind of follow up on those PR opportunities. And I've also had a lot of time to really think about diversification and new product development, and being able to kind of do that research of, okay, so the world is going to be different after COVID-19, and how is it going to be different, and what kind of products do I need to be bringing out to kind of meet that new world? So I'm going more down like a more of a casual shoe route, as well as the fancy heels and all that kind of things. People still want to go on cruises and go out to dinner, but my customers, I've been engaging with our customers a lot over the last few months and asking them what they're looking for, and they are looking for like more everyday, more casual shoes. So that's what I'm developing at the moment, and we've got like it's going to be quite exciting the next 12 months of like, now I've got like a load of innovations coming up, that really I kind of did most of that work before I launched the business, and then I was just so busy running the business. The innovation stuff is harder to kind of keep on top of, but this last few months has really given me the time to kind of like to nail all of that.
Okay, that's great. Boyd or Damon, you got anything to add on the sales and marketing stuff, or any comments either?
I was just going to give another very quick example of sort of pivoting, I guess, through crisis would be another of our businesses from Fund One, who developed a product. Well, they developed a set of products, but the one we kind of liked and wanted to support and back was a product that went into primary schools. It's a furniture product. So obviously lockdown happened, schools closed. We did not expect any transactions to happen over the next sort of few months. But what that founder, Nick, did is really sort of, you know, pivoted his marketing activity. Again, it's kind of saying that necessity is great for innovation, and kind of pivoted and thought, right, well, so where else? And you know, they have a professional range of these desks. They're retrofitted stand-up desks that can kind of fit into smaller spaces, as opposed to having the large stand-up desks that people often have in offices. And he sort of pivoted and started marketing out to the work from home market, so all the people not being furloughed, but the people that were still working but working from home, for utility businesses, whoever it is. And all these people had back problems, were now stuck at home, and it really opened up a market for the professional range, which we knew it was a good product, but you know, there's only so much time that Nick and the team had, and we really focused on the education space. And you know, they've achieved amazing things by and the sort of activity they did. It was fairly, you know, there were people that were receptive, I guess, because it was a bit of a booming, you know, it had a boom, and it's still going on now because everyone is still at home. So Nick just sort of tweaked the marketing, but then you know, picked up the phone, got in touch with some of those channels into there, so some of the retailers, so you know, some really big, well-known online retailers, and has you know, done amazing things. So yeah, absolutely. So
yeah. Okay. And Boyd, you got anything to add on this particular part?
Just to say, at the beginning of the lockdown, looking across all the investee companies that we work with, it looked quite pessimistic. We were very worried, obviously, about their future cash flow and all such like. But having come through now, whatever time period it is, a few months, it's actually, for most of them, as a generalization, it's actually been, I think, a positive experience. They've branched out into new markets. They hope to go back, most of them will hope to go back into the existing markets, but they've really sat down and thought about other areas that they can sell. And that particularly relates to online. A lot of them have really focused on their online sales. Yeah. So yeah, most of them have expanded their PR and marketing.
Okay, thanks very much everyone for that. So the next topic is really an investment question and topic area, and I'd just like Boyd to lead on this, and it's really what are the potential benefits and risks to investors from investing in SEIS and SEIS funds. I think, Boyd, you're probably best to go there.
It would be remiss of me not to say that obviously investing in startups and small businesses of a private nature is probably the highest risk you're going to take with your money. It's a fact. Venture capital is a very high risk business. The way that funds such as the British Design Fund try to some way reduce that exposure is through diversification. So the fund will want to invest in I think it's at least 5 companies to try and spread the risk. Any investor has to be fully aware of the risks that they're taking, and that's obviously very clearly disclosed in the information memorandum. But on the other hand, because it is an EIS fund, then there are certain tax reliefs and such like that the UK government tries to or promotes to mitigate that risk. So just running through those without going into too much detail of them is, first of all, there is the 30% income tax relief. So very simply, if you invested £100,000 into a fund such as this, you would get £30,000 back, assuming you paid the tax on your investment. So your net investment has actually gone down from 100 to 70. So your exposure is now 70 rather than 100. So that's very, excuse me, that's my phone. The second one is there is no capital gains tax on exit. So if I invested £100,000 into a fund such as this, and there was an exit of, say, I got £150,000 back after a certain number of years, say 4 years or 5 years, the £50,000 gain is tax-free. So again, very generous tax relief.
Is there a minimum amount of time for the investment to get your not CGT or?
Yeah, so it's 3 years.
Right.
You should hold the investment for at least 3 years. There is also capital gains tax rollover relief. So again, unrelated to this fund that you made prior can be rolled over. Sorry, the tax that you would pay on that gain can be rolled over for the life of your investment. And in other words, that's not actually a tax saving per se, but it is a cash flow saving. So that means whatever tax you would have paid on that capital gain, you could use to invest into, such as the British Design Fund. And then once you exit the fund, and you would then pay the tax, or you could keep rolling over it indefinitely. So that's a very generous cash flow benefit. And there is also loss relief, which is very significant. So should you invest and the fund goes terribly wrong and you lose all your money, there's a loss relief depending on your tax bracket. But it again is very generous. It can be up to 30, 40,000 on a £100,000 investment. And these are all means by which the government is trying to encourage investors to make investments in the type of businesses the UK desperately needs to encourage, the entrepreneurs and the startups. But it is recognising, as I said earlier, that it is high risk, and that's why these tax reliefs exist.
And do you think that the tax relief is it should be done from an investment criteria or from a tax criteria, or is there an unofficial happy medium, do you think, that
I would always say
someone's individual tax position, I guess?
An investor should always look at their own personal tax and take the tax question completely first. The investment always comes first. The tax, as I say, don't let the tax tail wag the dog. The investment is the important bit. The tax relief and benefits and all are secondary to the investor and are just there as an encouragement, but they by no means should be the determining factor at all.
Yeah. Okay. Thanks very much. Damon or Jenny, have you got anything to add in terms of?
Just throwing in, obviously, this fund is in EIS and SEIS, so you get yes.
Okay.
SEIS is slightly different, isn't it? Don't you get a higher tax percentage?
I was just going to say for SEIS, it's a 50% tax relief instead of 30. So on £100,000, you would get £50,000 back. And just to clarify, you would have to pay the tax in order to have got it back. The government's not just going to give you £50,000. I wish, or everybody would be investing.
Okay, thanks all for the discussions of the topic discussion. We're now going to go on to some questions, and we're going to start with some questions that have been emailed in advance. And the first one we've got is, who do you think will be the winners and losers from COVID, and has your investment strategy changed as a result? And probably Damon's probably the best person to, we've covered this a little bit, but let's just cover it again, Damon. Just to...
No, it's kind of, it's a sensitive topic, right? Everyone's, I think, a little bit of losing after COVID, but things like opportunities that I guess that we've seen, and we saw it kind of before the UK was, sort of seeing what was happening in around the Chinese New Year and the prolonged lockdown of Chinese New Year, the impact that had on manufacturing. So I'd say UK manufacturing businesses, and just manufacturing that's a bit closer to home, will benefit, I suspect. We were seeing it in February already, helping some clients and some of the businesses bring back some manufacturing, things like bottles, packaging, and sometimes that was to duplicate manufacturing, just to de-risk things, to not have all your eggs in one basket. And if that basket was sort of in the Far East, then people were seeing a lot of that. So I think there'll be on the shore, I guess, certain manufacturing. But I think it was sort of how Jenny approached it. I think those consumer brands that really take the opportunity to connect with their audience, connect with their consumer, will really come out in such a strong position. And like Boyd, like you were saying, we've seen it as well, where businesses have kind of been forced to diversify maybe in their markets, but when the other markets start to come back, they've got another sales channel in their pocket. So I think, yeah, I'm a big supporter throughout kind of lockdowns of where possible, not throwing the towel in, not necessarily hibernating business. I really think there's some smart activity you can do. I think people who have done that will come out fighting.
Okay, Jenny, you got anything to say or to add to that, or any views? I think you're on mute.
I couldn't really hear him very well. It was a bit.
Yeah. We can hear you fine now.
Yeah. No, I couldn't hear Damon very well, so it was a bit broken up. Sorry. I don't know why, but it all kept breaking up for me. So I don't want to add anything because I don't know what I'm adding to. I'm sure I'll answer the next question.
Okay. So, which is probably a good place to start with you on this one, Jenny. Is which areas of support have the BDF portfolio of companies offered you the most in terms of the benefit to the business? Do you think, as to what we might be able to offer you guys?
Well, I think I said earlier, when I started doing my research into like what investment was and what I wanted from an investor, and the kind of conversation that I'd had with Damon and the panel, just like helped me make that decision that BDF are the right people. And it's because I'd never had my own business before. It's my first ever business, and there was loads of kind of gaps in my knowledge, I guess. I knew about marketing. I kind of had an idea about digital marketing and how to reach the market and that kind of thing. But what I didn't know about was like product development. I guess I'm different to maybe some of the other businesses because and my background isn't footwear and it isn't fashion. So a lot of the barriers I was coming up against were like dealing with suppliers and manufacturers, and how to negotiate in terms with them and all that kind of stuff. So Damon was particularly helpful in just kind of guiding me through that process and mentoring me on that. And he also managed to he also introduced me to a couple of people that he knew in the footwear sector as well, and they were able to give me some like additional expertise and to kind of like fill those knowledge gaps. And because I'm based up north, because I'm like based in Manchester, it's slightly different, the type of people that you can meet than the people that are in London. It's just a whole different world, really. And I thought that the British Design Fund were best placed to help me make connections in a city that I just didn't, I didn't have anyone in London that I knew. So Damon knew quite a lot of people who could, like I say, fill those knowledge gaps with his network. And then I've kind of built my own network from that now, and I've been introduced to more people from that.
Okay.
Yeah, so that's the main thing, really. It's working on that bit where the other people might need marketing support or how to work with retailers, whereas I needed support in how to deal with suppliers in the supply chain, and Damon was really good in that. Okay.
And Boyd, have you got anything to add to that, or from Sapphire's point of view?
It's for me, one of the key things is the mentoring ability of the fund, in that if you look at the profiles of the people behind it, Damon, John, David, and the two Davids and Jonathan, who all got a very good broad range of business experience, 30 years, David Motum's 30 years building up two businesses. David has 25 years running a multi-million-pound toy company. That sort of experience is invaluable to startups. Jonathan, with his legal experience of 35 years, it all is incredibly beneficial, as Jennifer was just saying. And I think that's one of the unique points of the fund, that it's not just one area, it's just not just a one or two entrepreneurs, it's a broad range of entrepreneurs, legal, financial, and people with wise heads on their shoulders that have the experience of running multi-billion-pound companies.
Okay. Thanks very much, Boyd. I'm going to move on to the next one. And
David.
Sorry.
I was just going to say on top of that as well, we've got the mentors as well. So there's the core team, and then we've got all the mentors. Yeah. But yeah, I'm sure most people know that.
So how do we support the health and well-being of the entrepreneurs and the teams that we invest in? Damon, it's probably a good place for you to start there.
Yeah, so I guess it's funny. You know, so the core. I think this is more related to the core team when the support they get from us directors. So you know, it's when we set the fund up, we didn't know we'd do quite so much of this, but you do end up with a number of the startups. You've got to think they're spread across the UK. You know, for instance, at the moment, I think there's only one in the portfolio that's based in London. So they're spread across the UK. They're often, you know, the founders are often sort of working fairly remotely and working with remote teams like agencies. It might be a marketing agency, it might be a design agency, but they're not in the same space. So you kind of end up, you know, and invariably in that first year, you know, particularly the first year, they'll face challenges, stuff you just couldn't predict. But you know, as a team, we've often gone through it, and you wish you could predict them all. But the benefit we bring is that we know how to sort of hopefully get through all these challenges. But you know, it's tough, and they are fairly working remotely.
Then you're breaking up, unfortunately. I think I can't.
Oh, sorry, is that my internet?
Ah, that's better.
Is better?
Better.
So I was just saying, really, it's kind of, we often take the role of kind of almost, you become a bit of a life coach with some of these founders that are kind of working remote and hitting challenges. And we've got one, you know, a brand that's just about to launch, well, we're not end of July, it will launch end of July, start August. They have 3 design iterations on their products. You know, the founders, you know, predominantly working on their own, and it really knocks confidence. But I've been there before, you know, the rest of the team, you know, no, you don't always get it right. And this is a really highly engineered product. It has to.
Sorry, well, I'm losing you anyway. I don't know if the others could.
Sorry, it's my internet. I'll
It's your microphone.
I think it's your microphone, Damon.
Yeah, because you're not like sticking. It's just the sound. But anyway, do you want me to say
keep
something?
going. Keep going.
Do you want me to say something about how I think that he's helped me?
Go on then, Jenny.
My mental health? So, what I like about the British Design Fund is that how much of a kind of a support whenever I need it type of organisation, a kind of fund it is. I've heard some horror stories from other entrepreneurs that have had investors that kind of do the opposite of what an investor should do, as in, you know, ringing you at 4 a.m. and saying, why have you not sold more, you know, whatever, and, you know, why are you not working 75 hours a day?
Can be arranged, Jenny, to be honest.
and you know, that's not, it's stressful enough when you're starting a business, especially in an area like you don't, you know, for me, I knew nothing about, I was kind of not making it up I was going along, but, you know, I was you know, I was kind of feeling my way along, and I wasn't confident in every area. So to know that whenever I had a bit of a wobble about, you know, like one of my first big wobbles is that the factory never seemed to want to deliver on time, and, you know, and it's really stressing me out because I had no experience of the fact that factories generally do this to everybody, you know, and I thought it was just me, and I thought it was because I was a small brand. So, you know, those wobbles and those stresses, just to know that kind of someone's at the other end of the phone that has had experience of this already and then can just kind of put my fears to rest, that is it's a big relief. Like, I don't come from a long line of entrepreneurs, you know, this is like, I'm the first person in my family to set up a business, so there's no one else for me to go to. So that to know that I've got, it's like coaching really, in a way, you know, it's just somebody that you can just talk through problems with and talk through any issues with. I mean, I'm normally quite a strong person, and I don't crumble easily, but I still have, I think it's confidence wobbles in it, because I'm going into areas that I don't have experience of. What I can do now really nicely is, because I'm kind of like nearly 4 years in, I can talk to businesses like pre-launch and talk to them about their wobbles and go, don't worry, this is normal, you know. I can kind of give back a bit to what you guys have done for me.
Okay, thanks very much. So the next question I've got is, it's probably one for you, Boyd, initially, is what's the minimal maximum number of investments we plan to make each year, and the kind of approximate investment size?
So the minimum is 5 investments for this fund, and obviously that's a number that tries to take account of some degree of diversification for the investors. And the maximum that fund will raise is 2 million. So we would hope to invest somewhere around 100 to 150,000 into each company. So you know, it could be 10 or more companies that we'll be seeking to invest in, just depending on the actual amount that is raised.
Yeah. Okay. Thanks very much. Damon, you got anything to add to that?
No, that's about it. And hopefully my sound is fixed now.
Yes.
Yeah.
Okay. So I'm going to just take one of the questions we've just had from while we've been chatting away and discussing the topics. So Anne Ferguson has asked, hello Anne, I hope you're okay. We know you here at the BDF. So do you anticipate more manufacture taking place in the UK as we decouple from Europe? And will the supply of raw materials be reliable with alternatives in close range? So perhaps Damon, you'd like to make a comment on that?
So I suppose, so related to Brexit then, so trying to remove COVID, which has been most of the kind of questions I've been asked the last couple of months. So obviously the last year or two, lots of people have said to me, look, you're in hardware, Brexit's going to be a nightmare. You know, how are you worried about your businesses? And, you know, my whole world is kind of hardware. And my take on it is, look, there's some sectors which will definitely have to change. So if you're in the automotive space and you have hardware going back and forth numerous times across borders, something's got to give there, right? That model, as it stands, doesn't look like it will work so well. But the businesses that we work with, they're early stage. There's so much low-hanging fruit that really, if you think, you know, if they're manufacturing in the UK, exporting out, even just if you look at the kind of markets outside of Europe, there's enough. Even within the UK, there's most likely so much growth for those first couple of years. That then you start to look at, well, okay, we appoint distributors in certain territories. That's often the way businesses grow at the early stage. So, you may end up, your manufacturing may not even be in the UK, it may be somewhere outside of the EU, and you're shipping directly into distributors in the EU and passing on. To be honest, that's kind of what we see a little bit more. But if you were an absolute 100% British, have you lost me again?
No, we had, but you're back now.
I don't know what's going to. I need to invest more in my computer, I think. But yeah, I think if you're a British-based manufacturer, 100% here, and there's going to be tariffs most likely coming in of some shape or form. But if your product is needed and it's priced correctly, and you've built in enough margin in there, we're not talking vast percentages that are being put on. I mean, I've run companies that have faced huge sort of tariffs that have been dropped on them quite quickly, and you just make sure you've got enough margin. You make sure your product is unique and it's needed, and that you'll put through and it's protected.
Okay, so I think we've got time for one more question, and Brian Wilshire has asked a couple, but I think, Brian, we'll try one of yours. And the question Brian's asked is, what percentage of the ownership do you take of the business, and are you always content to be a minority investor? Is that a one for you, Boyd, initially, do you think, or do you have a comment on that?
Damon, what would you say is the typical?
So I'd say typical percentage is sort of around, sort of 16 to 20% typically. Remember, we've only had one fund put away so far. We have some businesses lined up for fund 2 that we're hoping kind of go through. But yeah, typically it's around that point. But it can swing. If a business is trading in considerably, got considerable kind of sort of recurring revenues each month, we'll take a different view. Obviously, we'd expect a lower percentage, and then the IP plays a factor. But yeah, I'd say average. I would be expecting.
And how content are we to be a minority investor? I mean, obviously,
yeah, we are. Yeah,
we are. Yeah.
Yeah.
Okay.
I think that is. I'm looking at my clock, and it's. Sorry, Boyd. Did you have a?
I was just going to say very quickly. It's in some ways. There's a positive. I know a lot of people assume being a minority investor is a negative, but in my experience, if you became a majority shareholder in a lot of startup companies, you actually demotivate the person behind the company. And
very good point.
Completely. Yeah. That's it. Game over then. Once the person's lost interest.
Yeah, I agree. And it's very much an individual person's business. That we're investing in people as much as the business, of course.
Yeah.
Yep.
Okay, everybody, thanks very much. I'm looking at my clock on my laptop and it's telling me it's 14:59. So I think we're finishing at 3 o'clock, Damon, aren't we?
That's right, yep.
So I'd like to thank Boyd, Jenny and Damon and the attendees. I hope you've all found it useful. I think we've all actually really enjoyed it. It's the first one we've done, and I think we're doing one next week, are we? The week after?
No, next Thursday.
Next Thursday. So let's just take this opportunity to thank all the panelists and thank all the attendees, and thanks very much.
Thank you. And any questions, just pass them on email. We will pick up on these and get back to as many as we can.
Yeah.
Thank you very much, everyone.
And
Thanks.
just to let you all know that the current fund is open until the end of July. I just thought I'd get that plug in so that not to miss an opportunity. Thanks very much.
Thanks, everyone. Cheers.
Bye.